Welcome back. It's time now to take a look at the top business stories. GCC paves the way for customs union. UAE's non-oil trade increases 22% in January. And Greek finance minister denies euro exit talks. Let's look at the equity markets first. The UAE's bourses both edged lower today. The DFM fell 1% to close the session at 1,591 points. Only 3 shares bucked the trend: Al Firdous Holding, which gained 0.6%, Al Salam Bank Sudan, which was up 1.8%, and Aramex, which rose 0.5%. All other shares were in the red. DP World, for instance, fell 1.5%, as did the shares of the DFM. Dubai Islamic Bank dropped 0.9% and Emaar Properties was down 1.6%. 68 million shares were traded, valued at 93 million dirhams. And over in the capital, the ADX dropped 0.4% to close at 2,685 points, with the energy sector falling the most. Dana Gas dropped 1.5% and TAQA fell 2.1%. Suru Real Estate dropped 1.4%. Abu Dhabi Commercial Bank was also down by 1.7%. Abu Dhabi Islamic Bank lost 1.9% and Bank of Sharjah was down 1.8%. 80 million shares were traded, valued at 111 million dirhams. And let's now take a look at the GCC markets, which ended mainly lower today. The GCC has set up a law to create a customs union to help boost trade among its 6 member states and strengthen regional ties. The mandate is planned to come into effect by 2015. It will abolish quotas and tariffs between the GCC's member states and will see the setup of a free trade zone. For that, member states must harmonize trade policies and set standardized categories for trade flows. The UAE's Minister of Finance, His Highness Sheikh Hamdan bin Rashid Al Maktoum, said his ministry is looking to focus on the full application of the customs union, and between now and 2014, all pending issues will be completed. The UAE's non-oil trade reached 70.2 billion dirhams in January of this year, a growth rate of 22% year-on-year. The Federal Customs Authority announced that non-oil foreign trade rose by 12.6 billion dirhams in the first months of the year, up from 57.6 billion for the same period last year. Imports rose 21%, reaching over 46 billion dirhams compared to 38 billion in January 2010, while exports rose 32% to 7.5 billion. Re-exports saw a year-on-year growth of 20% to 16.6 billion. Officials say the growth rates recorded are similar to those before the 2008 downturn, showing that the UAE economy is back on track. The UAE's finance ministry is not worried about the sharp drop in oil prices recorded last week. Crude oil futures lost almost $17 over the past 7 days, their biggest weekly drop since they began trading in 1983. Oil prices move up and down, but are no reason for concern at the moment, the Minister of State for Financial Affairs, Obaid Humaid Al Taya, told a news conference after the Gulf finance ministers' meeting in Abu Dhabi. He also stated that the ministry had no plans to issue a sovereign bond this year and that, if needed, it would be implemented at the beginning of next year. And in our fast financial news, officials from the UAE and Azerbaijan signed the 3rd Joint Economic Committee in Baku. At the signing, both parties stressed the importance of boosting cooperation for both sides in trade and investment, industry and energy, agriculture, finance, customs, telecoms, transport and property. Fly Dubai is set to introduce new routes as well as a holiday division into its budget empire as it looks towards a 140% rise in passenger numbers this year. According to a local paper, CEO Gait Al Gait said that his company is planning to sell holiday packages and increase its travel destinations by 4 routes to then 40 by the end of the year. Investcorp, a global provider and manager of alternative investment products, announced it has undertaken a majority buyout of Avivo, a UK-based online reservation and property management system provider, worth around 30 million British pounds. Avivo connects small and medium-sized accommodation businesses with online distribution channels. And after the break, we'll run you through what's making the headlines in international business today.